All eyes this week will be on the tension in the Middle East, if it will escalate or not. Oil price jumping sky high, but I think oil will go back. And markets seem a little calm about the Middle East tension because Nasdaq was only down 0.63% last week. And it was Friday for most of the exchanges where it went into red. Started a bit heavy red, then just slightly during the day growing up. Dow Jones down 1.32%, S&P 500 down 0.38%, so all in all, not too bad. And as I said, so much support below, everything is pointing towards continuous upturn in the markets. But again, geopolitical issues can change it all, and last week we saw exactly that. You're listening to the StockInvest.us podcast, trading tips with Jim as we head into week 25. Last week I gave you 5 stocks, which I thought could do good. But the fact is, only one of them were able to go in green, and that was Comcast, which only went just about 1% in profit. The 4 others, T-Mobile, O'Reilly, Kforce, and EA, Electronic Games, were all slightly down, didn't manage to do much. This week I will not give you 5 stocks, but I will give you a new tool which I really think you will like. And if you're listening to this on Spotify, you can later check it out on the YouTube version or the video version on Spotify if you want to see the charts itself, which I will present very shortly. But first, what is waiting us in the week ahead? Well, it's not really much. It will be Fed on Wednesday, but there is no huge expectations to Fed. We know that Powell was too late. Before inflation, we know is too late. Now, reducing interest rates. The expectations are that there will be only 2 cuts this year. I believe it will be more, because my prediction is that inflation will plummet, and it will plummet hard. The one thing that can offset this and cause things not to go exactly as I planned is, of course, if the escalation continues upward in the geopolitical issues. Now Middle East again is hot, then we have Ukraine, and all of these things can push oil, and if oil goes high, now it went up from some 63 up to some 72.3. Dollars inflation again can be an issue, and I think I saw it was JP Morgan or something that said that oil in worst case can go to 120, and if it does, there will be above 5% inflation increase. And that is exactly why I argued why inflation should go down, because oil was dropping so hard, and inflation numbers lately has been much better than the market anticipated, and I think it will just continue. Anyway, Fed will say what they think on Wednesday, but not much. If they cut interest rates, that will really take the market by surprise, and then we will have an extremely nice green day, but I don't think that will happen. Then on Thursday, people look a little bit on the jobless claim number, but there are no real huge expectations to them. Either market seems to be fairly strong. And despite all the negative articles on Financial Who, Bloomberg or whatever you check, mainly because they have Trump derangement syndrome, writing just anything, they try to twist anything into negative. As I said, the economic numbers are far better than expected, beating the market all over again. And this is what also the professionals see and why they stay in the market. Now, suddenly they say that Nvidia can easily go to 200. As you know, I took the chance when market was falling too hard. I always do that. Nvidia was down at 88. I just bought what I could. Nvidia currently sitting around 140. I think now they say that it'll easily push to 200. And it can, but it needs these good, stable markets to do so. And what do we see if you look at the chart? Well, we see there is a lot of support below. RSI is going somewhere in the middle. It's not very high. It's 62. That's not overbought. It's pointing a little bit downwards, but also the volume is following the market very nicely, which is such a good thing. And with all the support below, still we are in a scenario where it's higher chance that the market will continue upwards than it will continue downwards. But nothing I say will help. If the war escalates in Ukraine, then you should be in oil stocks. So if that is your gamble, stay in oil. Oil, as I said, currently trading around 73, but can get an insane boost up to 120. Easy. We saw that previously under Biden when it was a lot of fuss, how fast oil was moving up. I am personally in not too many oil shares. I reduced that when oil was over 100. Because I thought oil would fall, then I went strongly into oil freighters. So that's mainly where oil and gas freighters, that's mainly where I am. And they had a good week last week. Indeed, I think it's a sector that will continue to pay super high dividends. So to sum up the week ahead of us, chart says that it's higher chance that market will continue up than going down, but there is no guarantee. And my bet is the one reason that can cause market to go heavy down is if it escalates hard. But I don't think Iran will do it. I think Iran will send a symbolic amount of rockets that they have to do. But I think in general they are too afraid that too much pushback against Israel, despite half of the West is screaming and cheering for Iran. It's a very strange thing to see, but come again, we are in these times. That's where we live now. Iran is too afraid of regime change, so I don't think they will try. I think they will do some small things just to show some sort of force, but I don't think they will go all in. I don't think they dare. And not trying to defend anything or everything, but there was no option to let Iran have nuclear weapon. And if you for some reason now disagree with me and think that Iran should have a nuclear weapon, this podcast is not for you. Absolutely not, because I don't think that there is anything I can teach you if you are of that sort of thinking. That is the same thing in stock trading. If you go to these extreme high-risk stocks and you do not expect them to fall hard, for me it's just the same sort of thing. It's way unrealistic. You should be trading on the more stable side of things and grow your investments and portfolios. Much better to grow them slowly but steady than taking the huge high-risk items. Gold pushing upwards, $3,452 per ounce for the gold. My target of $3,500 is only $48 away. The target I set so many years ago and said that where gold should be seems to be reaching. Gold can go much higher. 10-year Treasury yield 4.42. It's falling, and it's a good thing for the market. It's also the expectations towards the US dollar. And the US economy. So professionals are slightly going into a better scenario for the markets, and this is why I argue that we can be in front of a very nice upturn. I believe that is enough about markets and the week ahead of us. It's very hard to say. It should be a volatile week due to the fact of this tension. We don't know exactly how it goes, so I believe market will push a little up and down. If you look at the buy and the sell signals, they are absolutely stable, falling a little bit last week, as you can expect, since market retraced a little bit. Across all the tickers that we analyzed, 30% is holding a buy signal, and that is very stable. At Nasdaq, only 14 offering a good opportunity in my way. Do remember, when they get at the very lower end, we can get into panic. But as I said, with good support below, there is nothing. The markets are not overbought on any huge indicator indicating that we should have panic falls. The only thing, again, which I can believe can cause panic falls if this thing escalates way too far out, and we understand that it will pull other major nations into the conflict. New York Stock Exchange 26, London 34, Oslo, Norway 41%, still high in Oslo, but oil was doing very good last week. Frankfurt, especially by the end of the week, of course. Norway doing very good on oil and war. If you were in war stocks, which I recommended many years ago, go into Kongsberg Automotive. producing weapons. Norway is having such a good time during these war times. High oil prices, tons of exports of weapons, doing very good. Actually, a little bit too good. We are not able to cut the interest rates. We're not able to cut the taxes. Still remains one of the highest taxed countries in the world. Frankfurt 25% down from 46. So Germany took quite a hit last week. National Stock Exchange of India 45, Tokyo 29, and Shenzhen China 25. All of these are at the lower end and translated to something easier to understand. None of these are overbought, none of these are oversold. They are just very, very stable, and that indicates to me again that there is no real huge swings to expected. More moderate, and since market were so resilient last week despite what happened at the end of the week, I believe it's a fair chance that it will just stay like this. Made up down to 19,000 for Nasdaq and then just continue to push upwards. Everything in this, I've seen this before, indicate the possibility of a huge rally coming up. At the same time, we can have the opposite. You never know. I personally, and that's my opinion, I will stay with quite high exposure in the market because I believe it's a fair chance market will go up higher than it will go down. I promised you to show you a new tool and didn't say that I will make it a short podcast, but I will. Have to go travel a little bit this week, so I have to make the podcast on the Sunday and not on the Monday before markets as I usually do. Monday, tomorrow will be very busy. While I remember, there are some quarter results, but nothing really big. It's Friday with Carmax and Kruger. That's the most interesting as I see it. In general, we are over the quarter season now, so no big expectations or surprises from that part either. I promised to show you some new tools and what we did. And you will find this available at Stock Invest now if you do the AI analysis. What we did is we look at how close the estimated earnings, not the actual earnings, but what the analyst estimated the earnings to be. And based on this, we can tell something how it correlates with the stock price, where the analyst able, when they predicted up, did stock price go up, etc. We correlate these things, and based on it, we can to some degree, but only some degree, predict the future. If we look at Nvidia, and I will post the Nvidia chart, and just remember, we are only looking at how, over a long period, what the analyst was doing with estimated, not the actual, but estimated earnings, what they thought it would be. And how it correlates with the price is more something like how accurate were the analysts, to put it another way. If we do this model, we put it on Nvidia, we can see that Nvidia is expected to go up minimum 33% over the next 22 months if the analysts keep being correct about the income, revenue, expenses, etc. for Nvidia. Microsoft was 19.5% for Microsoft, expected to go up, so more for Nvidia than Microsoft. Did the same thing with Tesla, but the analyst has not been able to hit the Tesla earnings at all, and price for Tesla move very independent on the price. We saw that on the last earnings because it's so much about the future expectations rather, so it was not very fitted model for Tesla. Then I checked across all Nasdaq, all 8,000 stocks that you can do this on. I checked. And Beyond Meat, which is a penny stock, it was very hyped some years ago, is one of the stocks that expected to rise the most. That doesn't say this is a good investment. I was more curious, very interesting to see it. And I believe it's analysts believing that Beyond Meat, which is almost artificial burger, will manage to turn around and feed the vegans, as we move forward. But very interesting, and I really recommend you do a deep search into Beyond Meat, because we can laugh all we want. It might be they came in early with something new. Very often we see this price in the beginning is very high, everything is high expectations, then everything come crashing down because you're not able to reach the markets the way you thought, you're not able to produce the way you thought, and all sorts of things come crashing down. But then it suddenly starts to find the ground, it starts to find the logistics changes needed, it starts to find the customer it's need, and slowly growing back. And might very well be that is the case. But for the next 2 years, the system says that Beyond Meat may very well be on a future strong upturn. And we are talking thousands of percent if the analysts get things correct. So, I hope you enjoyed that. You will find it if you go to stockinvest.us and make an AI analysis. You will find it for your stock if there is enough data for it. Not all stocks will have the data that we need to do these analysis. You can see how your stock is doing. This tool and many others was out at getagraph.com, my private playground, where I offer my followers for the things that develop long before they hit out on our main page, Stock Invest. We'll find them there, and if you are on the email list, you will also get notified when I create something new, where you can check it out and see if it's something you want or need. Only one thing left in this week's podcast, and that is the $1,000 challenge, and that is not much to talk about because I have NIO. I'm sitting in NIO. The portfolio value is $2,507.17 as we speak, so I doubled the money and then some. But we were up almost 4 times at the very, very best. NIO has been a bust since I bought, and I bought so much personally. Also, I've taken a huge chunk into NIO, trying to find the bottom, buying at several different levels. And it's a gamble. It's absolutely a gamble, but we will see. NIO had parts of the week very good, was trading almost up to 4, I think 390 something. But ending the week at 351, meaning that since I bought NIO into the $1,000 challenge, it is down 38.18%. Should have been out a long time ago, but NIO is one of the stocks that go. And then you probably ask yourself, so what happened if you put NIO into the same prediction system for earnings? According to the earnings, and what the analyst thinks, well, if that is somewhat correct, the price of NIO is expected to be almost $40 in just a few years. Realistic or not, I do not know. I know that China is slashing bid a little bit for all the subsidies of their cars. BID been selling. BID is the biggest EV producer in China, and they have been undercutting the prices quite long to take that market space. And now the official China says that you cannot keep doing it, meaning that maybe the gross margins will come back, the vehicle margins will come back also for NIO. NIO says they will go in profit for the first time by Q4. Seems like I'm selling NIO to you now. You shouldn't buy NIO unless you can afford to lose your money. It's a high stake gamble. I just find it interesting. NIO was traded $65, maybe even $67 at high some years ago. Currently sitting at $351. The market expects NIO will need much more money to go out, meaning that to grow, meaning that it will dilute the shares, etc. We will just have to wait and see. I, as I said, have taken a personal gamble. And you, my friend, if you still are here, you have been listening to the stockinvest.us podcast, Trading Tips with Jim, as we are heading into week 25. I hope you liked it. I hope you subscribe if you haven't. I hope, of course, you press the like buttons if you really did. And I hope you will be back next week. More than anything, I absolutely hope that your portfolio will be much greener by the end of the week, that you will be successful in your trading, that you will use the best tips you find out there, and that you will thrive. Until next week, just have a perfect week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.